All right, today we're going to tear into a massive business case study, how banking giant JPMorgan Chase is spending an almost unbelievable amount of money to get fast, in an industry that's famous for being, well, slow. Let's get right into it.
Everything, and I mean everything, starts with this one number, $17 billion. And get this, that's not their profit, that's their annual budget just for technology. This single figure is the engine, the rocket fuel behind their entire strategy to outbuild and out-innovate literally everyone else in finance.
So to really wrap your head around $17 billion, let's put it in perspective. Take a massive competitor like Wells Fargo. They spend around $4 billion on tech. JPMorgan is spending more than 4 times that amount. This isn't just a slight edge. It's a capital-fueled moat so wide, it puts them in a whole different league.
But you have to ask, why do they need to spend so much? Well, it's to solve a classic problem, what we call the incumbent's dilemma. For these huge, heavily regulated banks, their massive size, which you'd think would be a strength, often turns into a giant anchor that just slows them down.
And the scale of this challenge is just immense. I mean, we're talking about a company with a market cap pushing $600 billion, managing over $4 trillion in assets. All of that size comes with a mountain of regulation and, maybe most importantly, decades of old, tangled technology, what engineers call spaghetti code. And that stuff makes moving quickly feel next to impossible.
So, what's the answer? Well, that $17 billion isn't just for keeping the lights on. It's funding a very deliberate strategy to disrupt from within. Basically, instead of just waiting around for some fintech startup to come eat their lunch, JPMorgan has decided to become the biggest disruptor in its own backyard.
And this quote just nails their philosophy perfectly. They're saying that heavy regulation isn't an excuse to be slow anymore, it's just a hurdle you can clear, as long as you have enough capital to build your own infrastructure, your own private highways, to just bypass all the traffic jams of old-school finance.
You know, talk is cheap, but $17 billion is definitely not. So let's see how this strategy actually plays out in the real world. We're going to break down 3 distinct plays that really show this disrupt from within idea in action.
First up, a classic move right out of the tech playbook. Instead of trying to fix all their old, complicated systems at once, they did something radical. They decided to just start fresh with a greenfield project, a brand new digital bank built completely from scratch.
And that project is Chase UK. The logic behind this is just brilliant, really. By launching a totally separate, cloud-native bank, they unshackled themselves from all that legacy spaghetti code. This basically created a live sandbox, a playground where they could innovate super fast, test new features, and then, here's the key part, bring the winning ideas back to their giant US business.
And did it work? You bet it did. This sandbox isn't just some little experiment. It's a real, thriving business that has already pulled in over 2 million customers. It's proof positive that this strategy of building something new and separate can get you real results fast.
All right, let's switch gears to our second play, which takes on another huge disruptive threat, blockchain. Now, while most other banks were just running small pilot programs, kind of dipping their toes in the water, JPMorgan went all in. They built production-grade, industrial-scale infrastructure.
Their platform is called Connexus, and it serves enormous clients like BlackRock. But here's the most fascinating part. They are intentionally disrupting their own payment business. The thinking is, hey, it's way better to cannibalize our own fees now than to wait for some crypto startup or a new digital currency to do it for us. It's an incredibly bold, forward-thinking move.
And again, the scale here is just staggering. This is not some side project. Connexus is already processing over $2 billion in transactions every single day. They didn't just test the waters. They built an entire water park.
And for our third and final play, we've got to talk about the biggest tech trend on the planet, artificial intelligence. Here, JPMorgan is taking what could be one of its biggest weaknesses, its massive workforce, and turning it into a huge advantage.
So while a lot of companies were freaking out over security and banning AI tools, JPMorgan did the exact opposite. They built their own. It's called the LLM Suite, a set of custom-built generative AI tools. And the logic is simple but so powerful. If you can make hundreds of thousands of your employees just a little bit faster every single day, all those small gains compound into a massive organization-wide speed advantage.
And they are not messing around with this either. They've already rolled these tools out to 60% of their entire workforce. This is all about weaving AI into the very fabric of the company to make everything they do faster.
Okay, so we've seen these three massive, expensive plays, which leads us to the most important question in any business case. Is this enormous spending spree actually delivering? Is it paying off? Let's check the scoreboard.
A huge piece of evidence is right here in how they split up their spending. Roughly half of that $17 billion is for pure innovation, what they call change the bank. The other half is for maintenance, or run the bank. That 50-50 split is almost unheard of, and it shows a serious, deliberate commitment to funding future growth, not just treading water.
And the proof is in the pudding, right? Here's the hard data. They've aggressively moved their apps and data to the cloud, which is absolutely critical for speed. But the ultimate proof is that efficiency ratio. That's a key metric that basically shows how much it costs a bank to make a dollar. JPMorgan's is in the low 50s, which is absolutely best in class. Their tech investments are driving real, measurable results.
So, what's the final verdict here? What does this all add up to? Well, this isn't just a story about one bank winning. It raises a much bigger question about whether JPMorgan is building a monopoly, not on assets, but on speed itself.
And that brings us to this really powerful analogy, the Amazon of banking. Think about it. Just like Amazon built its own logistics and cloud infrastructure to totally dominate retail and tech, JPMorgan is building its own private financial highways. The bet is that this infrastructure becomes so good, so fast, that it's nearly impossible for smaller banks or fintechs to ever compete.
And that leaves us with this final, really provocative thought. By putting so much capital and so much tech power in one place, is JPMorgan just winning the game? Or are they creating a future where the entire banking system is dominated by a monopoly of the fastest? What do you think?